Welcome to our series on economic insights. Today we are talking to Danielle Hale. She's the Chief Economist at Realtor.com. And we're going to talk about Case-Schiller. I'm pretty intrigued by this one because I have no idea what it is. And I think a lot of consumers don't know what Case-Schiller is or why it would be important to us.
Yeah, so I think the full name of it is the S&P Case-Shiller Home Price Indices, but that's a mouthful.
It is.
And colloquially, we call it Case-Shiller. And it basically tracks home prices. So there are lots of different measures of home prices out there, but the unique advantage of the Case-Shiller methodology, Case and Shiller were academics. One of them is a Nobel Prize-winning economist, and they developed this way of tracking home prices over time. One of the difficulties of tracking home prices over time, if you look at a median price, for instance, is that if a lot of really expensive homes are selling, that can make the median price seem higher when the home prices, the homes themselves haven't actually changed value. It's just that we're looking at more expensive homes that are selling in the market. Or, as is the case that we saw during the recession, only people who had to sell were selling. There were a lot of distress sales, and that tended to bring down the price of homes, but not necessarily because homes had lost value. Some of them did, but in part it was just because it was smaller, less valuable homes that were selling.
So this strikes me as a really important one, really, because home prices really seem to be a great indicator of how hot the market is, the supply and demand, and to your point, you might have some inflated prices. So where are we today, with Case-Shiller?
Yeah, so the Case-Schiller index shows that in most markets, we're at record price levels. So prices are back up at or above previous peaks. The Case-Schiller data is available at the national level. They also track a 20-city index and a 10-city index, and of course they track the 20 cities that they produce. That 20-city index is based on, and those indexes track similarly. But they're not always exactly the same. So what's going on in the big cities in the U.S. doesn't necessarily match what's going on if you factor in some of the smaller towns and other parts of the country.
So are the 20 cities a mix of cities, or are they only the major metropolitan areas?
They're mostly major metropolitan areas.
So are we doing this at all? Are we tracking prices at all for more regional, maybe slightly rural areas?
So in their national index, they sort of add in other transactions to sort of account for that. So you can get a bit of a flavor of both. Now, one drawback of using the Case-Shiller data is that the technique that they use to get past that, changes in the quality of homes that are selling is called a weighted repeat sales index.
That's a mouthful.
It is a mouthful. And it basically means it takes a lot of data because they're matching up homes. So they look at a home that sold today, and if it sold in a previous period, then they look at what happened in the price difference in that particular home. So that's how they get around the fact that, different homes and the different types of homes that are selling. So it takes a lot of data to run it. So when they release the data, it's based on a 3-month average. So it's not necessarily the most current indicator, but it is the most, let's say, the most valuable if you wanted to think about what is the change in my specific property. It just might be slightly outdated by the time you see that information.
Understood. So it's really a 3-month rolling average in effect. So who produces this? I mean, where can we look to find it?
Yeah, so the index has kind of bounced around. It's now being produced by Standard & Poor's, which is why it's called the S&P Case-Shiller Index. And it was interestingly developed to help people who, they wanted to enable people to do options trading on the housing market. So there are a lot of people, homeowners, insurers, mortgage lenders, who might be in a bad spot if home prices decline. And one of the reasons for developing this index was to enable people to trade on the future of home prices.
Oh, that's interesting. So it's definitely an important, financial index, and not one that, people probably pay attention to. And it sounds like it's where it is today might really be encouraging us to buy. Is that a fair statement?
I would say that where it is today indicates that prices are up, and so there are some people who will take that as an indication to buy. There are some people who will take that as an indication to maybe be a little bit cautious because prices are so high. And that's something that we'll probably touch on in another segment.
Yeah.
But I think it's useful to pay attention to, and it's one of a series of price measures that are worth paying attention to if you're in the housing market. And understanding how it fits with some of those other price metrics is also important. So with Realtor.com, we produce listing prices, which is a good idea of where prices are going to go. Case-Shiller is similar to like the NAR median sales prices based on sales data. So it's what's actually happened.
Oh, great. Well, thank you. I did not know what Case-Schiller was. Thanks for watching this video. It's just one in our series of economic insights with Danielle Hale, the Chief Economist at Realtor.com. We hope you'll tune into some of the others.